Welcome to IMG Insights, our video series that dives into topics relevant to multifamily real estate investing. I'm Dave Mikkelsen, Director of Investor Relations at IMG, and we're a sponsor of investment real estate. We appreciate the opportunity to educate investors on some of the unique benefits of owning apartments. Of course, one favorable aspect for real estate ownership is the tax benefit. Looking at after-tax investment returns is really the appropriate way to assess the total returns of an investment. And a lot of taxable shelter is available with apartments. I'm talking with real estate tax expert Ric Say. In our previous episodes, Ric and I discussed subjects including rates for long-term capital gains and depreciation. If you missed those, I recommend you watch those as well. In today's video, we'll dive into another tax advantage of investing in multifamily real estate, which is the 1031 like-kind exchange. Now, this is specific to real estate and generally familiar to people, but Ric, just at a high level, what is a 1031 exchange and what can a real estate owner accomplish with it?
So a 1031 exchange is a tax code that allows you to exchange a piece of property that you own for another like-kind piece of property and not recognize the gain in the year of the exchange. And so what it allows us to do is exchange the one piece of property for the other piece of property and defer the capital gain on that first piece of property until the second piece of property, the exchange property, is ultimately sold. So it's a way to keep the 100% of the investment in an investment without having to pay tax on the gain on that investment, as long as it's transferred into the new piece of property.
Very good. Yeah, I like the way you've structured that out and described it. And I even use a word sometimes when I'm talking with people, and I call it snowballing. And so at this point, we've had some transactions that are 2, 3, 4 generations into their exchanges, and the snowball comes in where, like you say, you're transferring the full equity amount from one sale to the next purchase, and being able to capitalize on that whole equity amount and not having to pay tax in between allows you, so to speak, to snowball and to earn returns and to leverage kind of this bigger equity investment into the next property, on and on and on. So
correct.
IMG is really unique as a sponsor in trying to exchange every deal that we can, and we've been successful in doing that. I think most other sponsors, and certainly with other funds, they don't use the exchange, they're not able to use an exchange, but that's, I think, a characteristic of our program, where we invest in kind of specific deals one by one, and we don't group in portfolios or funds so that we can take advantage of the 1031 exchange. Well, good. Right. That's a good discussion point. Ric, talk for a minute about whether a limited partnership interest or an LLC membership can be exchanged. Is that possible?
Sure. So one of the things that we talked about was the 1031 exchange in the transfer of one piece of property into another piece of property. Under the Internal Revenue Code, the interest in a partnership is not considered property that can be transferred through a 1031. Therefore, your partnership interest cannot be exchanged into another partnership interest. It is an exchange that must be done at the partnership level. So the partnership can make an exchange from one piece of real estate to a like-kind other piece of real estate, but the partners themselves cannot exchange their partnership interest. So they would remain within the partnership, and the partnership would go through the exchange. And that's just information that's beneficial as partners are thinking about it and looking at the exchange.
Very good. And that's a point that I talk with prospective investors about. I think it's a great point to understand for investors who haven't been in exchange with a partnership, and that is, once they invest, we hold the property for 5 years. It comes time to sell, and we sell the property. The limited partner at that point has a binary decision. They can either be redeemed and cash out their ownership and take their proceeds and pay tax, or they can choose to remain in the partnership, and then the partnership as a whole entity is the exchanging entity. And we typically have a great preservation rate on that of 85 to 95% of members who'd like to remain in the entity and exchange. But it's a great tax benefit for these investors who have invested smaller dollars, from $25,000 and up, to exchange, and typically they wouldn't be in a position to do that. So that's something that we definitely take advantage of. Ric, thank you again for sharing your expertise on this topic. This concludes our video for today, but more IMG Insight episodes are available on demand at our website, where Ric and I keep the conversation going about tax advantages in multifamily real estate investing.